Hello and welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, the winning streak, the longest winning streak in nearly 2 years, or November 2020 basically, is now under threat of breaking. If you look at the Nifty,
well, I think we still have half an hour, CJ. So
I
would
think
still
I
hold
think
my
we can.
horses.
I think Santo. I think we can take it for granted that, given the fact that we're almost 1.1% down, I don't expect that sort of a recovery. Because if that sort of a recovery comes in, then I think bears should just pack their bags over the weekends and just leave this market. Because if you look at the Nifty and Sensex at this point of time, they look set to break a 8-day running winning streak on the market. The reasons why market is down is clearly a lot of it is because of global cues. If you look at the global cues, US stock futures are down over 100 points. European markets have started on a weak foot, and Asian markets are also down. US dollar index is almost at a 1-month high, and that has clearly taken a lot of investors by surprise. And Santo also, today we are seeing some short positions also being added in the August futures of the Nifty 50. So clearly, the setup going into the weekend is not that great.
Well, on the last point first, probably the addition of short positions mean that there are more short positions to be now covered, pushing the market even higher.
We have only been seeing long additions over the past 1.5 10 days. So I probably feel that probably there could be more unwinding than short covering in the next week.
Very clearly, it's still early to call a trend reversal at this point in time. Although if you look at over the past 3 or 4 months, every time the market has rebounded from the low, it has only fallen back even lower.
Yes.
We saw that in March when it fell to around 15,700 on the Nifty, then rallied all the way to 18,200, then fell back to 15,200.
Yes.
So the key thing to watch out right now would be whether the Nifty gets past 18,200. If it doesn't, probably that could mean bad news. But for now, the one good thing is that participation has been quite low, especially from the retail investors. We did see a pickup in FII buying, but if you look at local investors, most of them reacted too late. So as such, you are unlikely to see any major selling pressure from that quarter. The key negatives at this point in time, clearly rising commodity prices, and as CJ mentioned, the strength in dollar index. These are some of the things to keep track of at this point.
I think, Santo, yes, the dollar index would be quite crucial, and of course a lot of the Fed commentary that is coming in now, I think that will probably sway the market over the next 1 week. That said, now let's quickly take a look at some of the stocks that were buzzing in trade, and there were quite a few out there, Santo, today.
Well, starting with Vedanta, Antique has initiated coverage on the stock with a buy rating. Now the stock has been quite volatile over the past couple of months, but of late again investors once again seem to be warming up to the stock, and reasons are not hard to seek. A good diversified portfolio there, CJ. It's present in almost every possible mineral and metal that you can think of, at least all the major ones. That apart, commodity prices, especially those of zinc and aluminium, have once again started inching higher. That is clearly good news. And because of this huge shift towards renewable energies and decarbonization, that would mean that the demand for key metals is likely to go up, and Vedanta clearly will be a big beneficiary of that, especially lithium, nickel and zinc. So you will see good demand there, and besides that, overall there's clearly a demand supply mismatch at this point in time. And even if that doesn't widen, probably it could still stay at these levels for some more time to come. At this point, I think things are looking pretty good for Vedanta. Not to forget that it's been one of the low-cost producers in many of the areas that it operates, which means the margins have been steady and the cash flows have also been quite good. And on top of it all, it's a good dividend yield play. So at this point, I think the outperformance could just continue.
I think, Santo, it would be a little long shot to think of Vedanta probably as a portfolio stock, because at this point, over the past few months, Vedanta has been a good dividend play. But in terms of stock performance, the consistency in the stock is lacking. I think if you're trying to play the aluminium market, you rather go with a Hindalco. If you're trying to play a zinc market, you rather go with a Hindustan Zinc, which also, of course, is a subsidiary of Vedanta, but it's a more pure play zinc bet than Vedanta as such. I think for me, yes, the fundamentals are improving. They are showing signs of improvement, but the price action overall probably will lag behind some of the peers out there in the market within the non-ferrous metal space. So I would keep an eye on it, but I would probably not be too optimistic on it. also, if you look at, even in the market, traders have actually been adding short positions on the counter over the past few sessions, and even today there has been a built-up of short positions in the F&O segment in Vedanta. So clearly, a lot of the market is also not that convinced that the stock could give hefty returns in the short term. Well, one stock that is on my radar today and actually has been in the news quite vociferously today is IRCTC. Now, why is IRCTC in news? The stock, if you look at the stock performance, of course, you would think that something great has happened. Well, whether it is great or not, it is debatable given which way you're looking at it. But the news out there is that, of course, IRCTC is looking to monetize its travel data that it collects from the customers like you and I, people who book their travel tickets on IRCTC's platform. They're going to collect that the data that they have collected. They'll now be able to share it with people outside and charge a fee or an income for it, and that will provide an additional lever of revenue for the company that already has been growing quite fast. Now, the question here is, Santo, why is IRCTC doing this? Well, not so long ago, government had done a review of all PSUs, and IRCTC was part of that. And they wanted to look at that what are the assets available to a company like IRCTC that can be monetized to improve its valuation, improve its income stream. And KPMG, which was in charge with this study, they had recommended that the travel data that IRCTC has that runs into millions and millions of bytes could be worth as much as 10,000 crore, right? So clearly that was one lever that IRCTC could pull in order to boost its revenues and income going ahead. And it seems like it is trying to do that. Now the question would be that, is it
ethical? Ethical is the question.
Ethical, whether there are privacy issues. Of course, privacy issues will come out. Apparently, according to media reports, IRCTC has said that they are not, this is not a nilami or an auction of the data. They are just going to share the data, much like a lot of social media companies do. You talk about Facebook, you talk about Instagram, Twitter. They also do share user data with advertisers out there to monetize that data. And I think IRCTC is also clearly trying to do the same thing. So I think, of course, the concerns around privacy will remain. Whether customers like you and I would be happy about it, I don't know. Maybe I am a little iffy about, people knowing where I am traveling and then being bombarded with ads because of it. But let's see how it turns out. But from a fundamental point of view, clearly this is a big positive for IRCTC. And let's not forget that overall also IRCTC has been in a general uptrend because of the increase in travel that we are seeing currently in the country. The stock has corrected a lot from the record highs of October 2021, and therefore the valuation support also seems to be quite good.
Well, clearly it's one of the best plays on the reopen theme at this point, and you're seeing that in the numbers as well. The June quarter numbers were pretty robust, and the market has been quick to respond as well. The stock has now risen to about 750 odd, good run up there. Now, as to this part about the company planning to monetize the travel data, one has to see what's the potential out there and what is the kind of income stream that it will fetch for the company. It's very clear. Right now the market is in a bull phase, and any news which talks about companies improving their earnings are bound to be greeted with a lot of enthusiasm. And maybe that is what you're seeing right now, because nobody is clear as to what's the kind of earnings that IRCTC stands to make from that. My only worry at this point is that there was in the past talk about the government further trimming its stake in the company through an OFS. Till some time back the stock was languishing, but now that it started inching up again, although it remains to be seen whether it will go back to the highs seen in last October. But once again, I think the chatter of the government selling stake through OFS is once again doing the rounds. Yes, that's one. Secondly, you saw a lot of institutional selling in the stock during the December quarter, and would like to see whether institutions once again start buying into the stock. That is something I would keep an eye out for, CJ.
I think, Santo, if the stock keeps performing, probably the FOMO factor will bite the institutions as well sooner or later.
Definitely. Well, Indian Energy Exchange, this was a stock we had discussed yesterday also. Now, there has been a further development in that. Yesterday, 13 states were barred from participating on energy exchanges till they clear their dues to generation companies. Now, today 6 of those states, the restriction on 6 of those states have been removed. But at the same time, CJ, some near-term concerns will continue to persist, mainly about the volumes on IEX, which has been steadily on the decline for the last couple of months now. This was also reflected in weak June quarter numbers. The stock, technically the stock appears to be finding a lot of support around 160 levels. It's bounced back twice from around 155 levels, and after the steep fall yesterday, once again the stock has not fallen as much compared to some of the other mid caps in today's bearish market. But I would still say that the upside in the stock clearly looks limited, even if there is some respite on the number of states being allowed to trade on energy exchanges.
Yeah. I mean, clearly, out of 13 states that were banned, Santo, because of their overdues to power generating companies, almost 6 have now been allowed to start or resume trading again on the power exchange. I think overall, ultimately, you would expect all of those states to come back, because clearly this is a new system that has been put in place by the government to incentivize state governments or state discoms actually to start paying off their dues to Gencos. And I think I would expect a lot of the states to find solutions to this, because otherwise there could be a power crisis in our hand in terms of meeting the demand out there. So I would expect states to probably work out a system of a payment. Maybe you can make installment wise payment, or there could be further borrowing that could happen. Maybe state governments might pitch in. So there are a lot of solutions. This is not the end of the world as far as the other 7 states are concerned, and I don't think that the longer term picture deteriorates much for Indian Energy Exchange just because of this issue. Well, Santo, the next stock on my radar is actually the worst hit stock on Nifty today, and that is Reliance Industries. Now, yes, the news flow that came in earlier this morning is a little bit of a negative for the company, given the fact that the government has raised the special additional excise duty on petroleum, your diesel exports as well as jet fuel. But I think overall, if you look at RIL, I think clearly a lot of analysts are of the view that it is probably the best earnings story that you will find right now in the large cap space in 2020-2023. They are clearly of the view that the correction that the stock has seen today, not only today but the past few sessions as well, clearly is a buying opportunity. And also, let's not forget that the AGM is also coming up, and generally RIL tends to perform quite well, weeks ahead of its AGM and weeks after its AGM. If you look at the average return for the last 10 AGMs post the AGM, it tends to be around in the range of about 6 to 7%, and sometimes it has gone as high as almost 23%. So clearly, I think AGM would be the next big trigger for the stock. The AGM would be held on August 29th, and there are a lot of expectations with respect to some announcement with the green energy project, also the possible listing of its consumer retail arms. So we will have to wait and watch, but I think this correction clearly could be a buying opportunity for a long-term investor out there.
Well, no quibbles as far as the fundamental side of the story goes, CJ, but at the same time, the stock seems to be running into some kind of technical difficulties. Twice it has tried to get past that 2800 mark and has been unable to do so. I would say that, once the stock manages to convincingly close above that level, maybe the fortunes have really changed.
Possibly, yes. I mean, I think everybody has been waiting with bated breath for RIL to cross that 2800 mark, and let's hope that it will happen after the AGM.
Well, last stock on our watch list this afternoon is Coromandel International. Now, within the chemicals space, CJ, agrochemicals seem to be in a league of their own. At least the outlook for this segment has not changed much, and you can see that from the strong performance of Coromandel shares also. It's managed to hover around its all-time highs. June quarter numbers were pretty strong, and most importantly, margins has been a big concern for the chemical sector in general, but Coromandel has managed to hold on to its margin as well. 12% EBITDA margins as compared to 13% during the same quarter last year. So that's quite a decent performance. Plus, you have that food prices continue to remain on the higher side. At least, even though inflation is cooling down, we are not seeing so much of that as far as the food prices go. And you've had a good monsoon as well. Considering all these factors, I guess demand for agrochemicals are only likely to go up in the coming months.
Well, Santo, I would have to differ with you on that. I feel that probably the outlook for demand in particular going ahead for agrochemical companies appears to be a little muddled. I say that because yes, if you look at it from overall level, monsoon is in surplus so far, about 9 to 10% to its long-term average, and that generally you would suggest that yes, we have had a normal monsoon and therefore that should be great for agrochemical companies. But if you look at the spatial distribution of monsoon, it has been very, very erratic. We have seen the northern and the western, southern and the western areas get a lot of rainfall. In fact, too much rainfall that it has triggered floods in several parts. And then the northern and the northeast not getting that great a rainfall, right? So for me, I think the demand conditions probably could be a little erratic in various markets for a company like Coromandel as well as the other agrochem players out there. The good part with Coromandel is that they also have an export business, so that should probably help them out. But at this point of time, from my point of view, the outlook on demand requires a little bit more clarity that might come with the September quarter earnings. Also, interestingly, from a short-term perspective, Santo, today I noticed that there was a lot of unwinding of long positions happening in the F&O segment of Coromandel. So that would be something to keep an eye out on, whether this becomes a few days trend going ahead, and maybe then you could see some long positions being added, or maybe traders would be forced to add some short positions because of this unwinding that is happening.
Well, with that, let's take a quick look, check on the markets at this point, and indices are still pretty much under pressure.
Yeah,
so CJ, finally the winning streak seems to be coming to an end.
Yes, Santo, you were hopeful that probably some things will change around in half an hour, but clearly we are at 316 and the market is near the day's low. The Nifty is down about 1%. If you look at the mid and small cap space, almost similar sort of losses. Nifty mid cap 100 index is down about 1.3%. while the Nifty small cap 100 index is down about 1.1%. And the VIX clearly has made a big move today. The India VIX index is up by 4.8%, Santo. So clearly a lot of short positions are being added, a lot of short positions are being seen. And if you look at sectorally, Santo, the interesting bit is that is the PSU banks and banking names that have clearly led this. Apart from, of course, the index heavyweight RIL that has, of course, seen about a 2% cut. But Nifty Bank Index is down 1.6%, which is very interesting given the overall rosier outlook for the banking space. At this point of time, it seems whenever there is selling coming, banks are at the forefront.
Well, and what are the key things that we have to keep an eye out for, CJ?
Well, Santo, not too much of economic data points coming out. Of course, earnings season is clearly over, so that is something that is now out of our way. But today, later in the evening, another US Fed member, Tim Barkin will be giving a speech, so that will be very crucial. Yesterday, we had two members speaking, and we clearly seen the impact of their speech on the market today. So it will be important to see what he has to say in terms of his rate hike expectations, as well as on inflation in the US. Apart from that, of course, next week all the attention will turn to the Jackson Hole Summit, which is the the annual conference held by the US Federal Reserve of central bankers across the world. Now, Fed Chief Powell is expected to speak, and I think the summit starts on Friday. So the entirety of next weekend would be all about central bankers and their monetary policy theories. So clearly a lot to look forward to for the market.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your feedback in the comment section below, and have a wonderful weekend ahead.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live Monday morning at 9 a.m. Till then, have a great weekend.